tonight's topic is going to be market structure, and we're going to continue a discussion that we had a few sessions back about entries and types of entries that you can take using market structure. So we're going to come over here and recap a few things. Let's come over here into our little drawing zone here. All right. So just as a recap, guys, there are three types of entries you can take that are based on market structure. Three different types of entries. All right, entry type number one is a market continuation trade. So market continuation trade, basically what that means, the market's trending up, the market's trending down, you identify that and you enter the market. It's really that simple. Entry number two. Entry number two is market reversal. Market reversal. Okay, so for market reversal, you identify the structural point, whether it's the recent swing high or the recent swing low. The market breaches that level, retests, and you enter for the reversal. That's the market reversal entry. Now, the third type of entry that we didn't have a chance to discuss on our previous session is the multiple time frame analysis, and that is going to be a structure reversal setup. All right, and guys, tonight's session is going to focus around this right here. Okay, MTA structure reversal. Talk dirty. What, Easton? All right, so let's go ahead and get on into that. So that was just a recap. Let's get on over here and let's move from here. So let's say that we've got a support and resistance level right here, and we've got a support and resistance level right here. All right, and let's go ahead and label these so everyone knows what's going on here. So here's a resistance, and I'm pretty sure that Easton has talked to you guys before about support and resistance. So I'm not going to be discussing or teaching you guys about support and resistance in this session. This session is going to be about market structure and entries. So I'm going to assume that you have a basic understanding of support and resistance for this example here, and we're going to just move forward. Now, let's say that let's say that we're on the 4-hour time frame. Let's do a little, here's the 4-hour time frame. Okay, and let's say that price, let me get my little, let's say that price is, oh my goodness, what was that? Let's try that again. Let's say that price is trending up, like so. All right, so we are bullish on the 4-hour time frame. We see something like this. Now, my question to you guys is this right here. If you open up the 4-hour time frame and you see that we're bullish and we're rising like this, my question to you guys is, what is the 1-hour time frame going to look like? What is the 1-hour time frame going to look like? What's the market structure going to look like? Well, it's going to look something like this. Right? It's going to look something like that. If the 1-hour time frame is not in bullish structure, there's no way that the 4-hour time frame would be rising. Okay, you see what I'm saying? The only way that the 4-hour time frame is going to be rising like this is if the 1-hour time frame is in bullish structure, which means we're making what? Higher lows, and we are making higher highs. like this. Okay, so we're continually making higher highs, we're continually making higher lows, and the moment that we fail to do either one of those, then the market will no longer be bullish, right? Okay, so here's my question. If you're on the 4-hour time frame and you notice that price is approaching your resistance up here and you want to enter a sell trade, how can we use market structure and multiple time frame analysis to increase the winning probabilities, to increase the overall likelihood of success? Right? Because here's the thing. Let's see that price comes up here to this resistance and you take a sell and price just continues to go. How often is that going to happen? Quite a bit, right? Quite a bit. I'm sure a lot of you guys have experienced this when trading support and resistance. You know, if price approaches a level that you want to take a trade from, price just goes right through it like it wasn't even important. You lose the trade, right? Something else that might happen. What if price comes up to this resistance and then you see a doji, okay, or an exhaustion candlestick or something, and then you think, oh, okay, cool, let's take the sell trade from our resistance, and then what happens? Price prints a doji and then it continues going, right? You lose the trade. So what this session is going to focus on is how to implement market structure and not get faked out on support and resistances, or really any kind of entries, regardless of what your technical analysis criteria is. Okay, and again, like anything that we show you guys and you're going to learn in Forex, nothing works 100% of the time, but this right here will drastically help your trading, drastically. Okay, so here's the concept. What is a doji? It's a price action formation that hints that there might be a hesitation or reversal in the market. It's outside the scope of the session here. So let's just think about this, right? Let's think about this, guys. If we want to take a sell trade from this resistance level, right, and we want to see the market come back down, what's going to have to happen over here on the 1 hour before the market goes bearish on the lower time frame? What's going to have to happen? Price will have no choice but to cross into bearish structure on the lower time frame, right? Yeah, exactly. Right, before we're ever going to go bearish on the 4-hour time frame, the 1 hour time frame will have to cross into bearish structure before we can go down. So the idea behind this is we're going to be going down to the time frame below and looking for this confirmation for entries based on the higher time frame analysis. Right? Because guys, what can happen is you can be looking for a sell trade up here at the resistance or whatever you have marked. Doesn't really matter. And then you can go to the lower time frame right here on the hour and it can pull back and then keep going. Happens all the time. But if you wait for more confirmation right here, then what you're going to find is that your trading is going to become a lot more accurate. Take a lot less losing trades. And of course, you know, make more money. So what we're going to do is, now that I've kind of gone over the simple concepts with you guys, before I go into the markets and we look at this firsthand, do y'all have any questions for me about anything I've said up to this point? Does everybody understand what I'm saying here and understand the principles? Okay, awesome. Awesome. Well, let's do it then. I'm going to clear everything off over here. Let's see, let's go on chart and let's clear everything off. And why don't we go ahead and pull up a different pair? Let's go to Euro USD. Let's go to Euro USD. All right, and let's go to the, oh, this will work right here. This will work right here. Let's go to the 4 hour. MTA. MTA means multiple time frame analysis. Sorry if I didn't make that clear. MTA means multiple time frame analysis. All right. So as you guys see, I've got Euro USD pulled up, okay, on the 4 hour time frame. And guys, I used 4 hour and 1 hour. It does not matter what time frame combination you use. You can use the daily 4 hour. You can use the monthly, weekly. You can use the 5 minute, 1 minute. It doesn't matter. And also, I used an example of support and resistance. It doesn't matter if you're what you're using to determine that you want to enter a trade in the market. It doesn't matter if you have a fib pulled up, a moving average. It really doesn't matter. What a harmonic doesn't matter. The principle applies regardless and in all situations. Everything is universal. Okay, but just as an example, right? And I'll show you guys several examples here. I have right here, man, these ads are killer today. I've got right here, I've got a support level. Support level. Okay, so this is very similar to our example from earlier. Now, let's take a hypothetical situation here. Let's say that we realized that we had this support level after seeing these interactions here, and we're coming up on this area right here, live market. So just so y'all see what I'm talking about, right here. Let's assume that we're right here in the market, and we want to find a potential buy trade down here at the support after seeing these interactions. All right, what can we do? What can we do? Well, we're going to go down to the 1 hour time frame, and we're going to come over here, and we're going to look to see if structure breaches. And if it does, that's going to be our confirmed entry that we're looking for. All right, so let me get rid of this circle here. We all know the area that we're looking at. All right, so guys, let's drop through this. Let's follow me here on down. We're heading down. Here's our structure. We're just gonna go through nice and slow and make it nice and complete here. All right. And we're watching down here, and what are we waiting for? We are waiting for this right here to break. Once it breaks, we know that we can buy. All right, so what happens? Price breaks, price comes back down, and at this point, we know that we're now in bullish structure, and boom, that's all she wrote. Your entry, let's talk entries. Let me, whoops, there we go. Entries. It doesn't matter. Once structure broke and retested, it doesn't matter if you entered this red candle right here. Doesn't matter this one, this one, this one, this one, this one, that one, that one. Don't enter the big green one. That means you missed it. Enter any of them in here. All right? Does everybody understand? Did I make this clear enough? Are there enough arrows for entries here? Stop loss, yes, absolutely. Very, very good point, Charles. In terms of the trade opportunity, when you guys take this trade, your stop loss is beneath the lows, beneath the zone. Okay. So let me just reiterate this because it's so important. In this case, if you see that, where's my little, whoops, I did it again. If you see that price is rising here and you want to take an entry, all right, you need to see price break and hold. and then you expect a continuation, and once that happens, you are looking to place your stop above the highs. So above the recent high in the case of a downtrend, in the case of an uptrend, beneath the lows. Okay. Okay, so and then let's go take a look back at the 4-hour. All right, and as you guys can see, price continued to rise at that point for another, 217 pips. Structure held the entire way. Structure held until right here, and you got out somewhere in here, most likely, if you were swinging it. Okay, let's look at some more examples. Let me get rid of this. Let me get rid of everything on here. Okay, let's say that you identified this region right up here. All right. You said, ooh, 1, 2, 3, 4, 5, and price is currently rising up into this zone. And you're thinking, you know what? I would like to take a sell trade from here, but I don't know if price is going to come up here and reverse, or if price is going to come up here and just go right through it like it didn't even exist. What can we do? Let's go to the 1 hour and let's watch. All right, guys. Let's see. Let's see if we're going to get our trade opportunity. Price is rising. Hopefully you guys are comfortable enough with structure at this point to follow this pretty smoothly. Price break structure, price retest. We now have our confirmed sell trade. Remember, stop loss needs to be above the highs, and we're good to go. We're good to go. We have the confirmation we need to know that, hey, price has reacted as we expected it might on the 4 hour, and we now have extra confirmation to enter this trade. That means the chances of losing this trade just dropped exponentially because there's that much more confirmation. All right, is everyone feeling this? So those are two examples of it giving you an entry. Let's look at an example of where it saves you from losing a trade. Why don't we look at that? There's tons of those. There's tons of those. All right. All right, very simple explanation. Y'all see this? Let's say you had this low marked right here. You said, ooh, look at this reaction right here. I wonder if when price comes back down, if we're gonna see a nice buy trade. You know, I've seen some people do some crazy things. Maybe you'll have something like this, and you're trying to do something like that. You know, whatever. It doesn't really matter. Let's see if we get the entry. What happens, guys? Is there any entry here? No. No entry. Some people are going to get fooled and buy this little mini exhaustion right here. And those people are feeding our pockets. Now what happens? What happens? Price is going down, and then what? Price breaks, retest, and you say, okay, sweet, thank you, and boom, you're in the sell trade. But beforehand, you'd have been in the buy trade and you'd have lost, and then you probably wouldn't have even caught the sell trade because you'd have been mad that you just lost. Let's look at some more. And here's the thing, guys. I want to make this super clear, right? Because I know that Easton did a session on support and resistance, and he showed y'all like you can almost make anything look like a support and resistance. So regardless of if you had your support here, 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 it doesn't really matter where you had it because look, price did not break structure all the way down. So you're not going to get faked out as much. There are so many instances in the market where like I'm expecting that price will react somewhere and then it just doesn't. It just goes. And you know, this is one of the ways that I help, you know, eliminate some of those unnecessary losses. You know, like let's see. I mean, I can do examples for days. Let's take a look right here. Right? Maybe we're looking at these lows and we're thinking, you know what? This looks like a great spot to buy. Look at this, 1, 2, 3, 4, and you know, price is coming down over here, and we're thinking, man, I just need any reason to buy right here off this level, right back up to the highs. Let's go to the lower time frame. So here's an example of the 1 hour 15. You guys tell me, did you get the entry? No, but you got the sell entry, didn't you? Whee! On down you went, pips. That's right, retest for a sell, no buy. Let's go to a different pair. This is boring. It's too simple. Let's go to GA. Oh, what do I have going on here? Okay, I remember this. We actually talked about this on a session. Check this out, guys. This was one of the last sessions that we did together, and told y'all GA was bearish based on structure. What did she do after that? Whee! On down she went. So she dropped another, what was that, another 200 pips after that? Check out my squeezy GN. GN, y'all want to look at GN? Let's look at GN. Okay, so GN. GN looks like trash. I don't want to look at GN. We're going to go back to GA. I love you, Demiria, but Jesus. All right. So let's take a look at GA. And why don't we look at another time frame? Let's go to the 15.5. We're going to use the 15-minute, 5-minute combination. I want to show you guys that this is consistent. Okay. Let's say, where's an example? Okay, here we go. So let's say we're looking at this support right here. And we're thinking, okay, 1 rejection, 2 rejection, 3 rejection. Let's see if we get a buy opportunity right here. Let's go to the 5-minute and check it out. You tell me, guys, did you get the buy opportunity based on market structure on the lower time frame, based on these principles? No. No, you did not. She held. She held structure, no entry. You guys seeing the power of this? You know, it's not even just about the fact that it's going to stop you guys from getting in bad trades. It's also going to help you guys identify when it's time to take the correct trades, because you just have a better grip of what's going on. All right. Let's go to Euro New Zealand. I understand that Easton talked to everybody about fibs yesterday. Had a very interesting session on fibs. Why don't we look at an example with fibs? How does that sound? What do we got in here? Okay. Let's look at an example with fibs. Let's take this move right here. Take this move right here, all right? And let's say that we're looking at this move right here on its way down. We see a nice swing coming down right here. And we say, okay, here's a nice little move. Let's take out our Fibonacci tool. Pull it down. Okay, so we started up here. That's where we start our Fibonacci. We bring it down to the low that we're looking at, and we're looking for a retracement sell, right? That's the idea. All right. So let's just to be clear, let me go to the 4 hour and make this more clear for everyone. All right. I'm showing you guys all of the different avenues you can implement this with your trading, okay? So we drew this Fibonacci based on what time frame? We were just on the daily time frame. Okay? Just on the daily time frame, we identified this area up here. Wow, look how just crazy this circle looks. That's not going to work. That's got to go. There we go. Oh, it's so much better. So we looked at this swing right here, and we said this is a pretty decent swing. Let's draw our Fibonacci down. And we're going to look for a pullback sell, right? Pullback to the 38.2 in a sell, or pullback to 61.8 in a sell, something like that. All right. Now, what you guys are going to find a lot of times with Fibonacci, same thing with support and resistance. It doesn't really matter. Price will come up to the 38.2. It'll give a little exhaustion, and then guess what it's going to do? It's just going to keep going. Like, you know, how can you avoid taking those losing trades? Well, we just dropped down to the 4 hour. Drop down to the 4 hour. What happened right here? Who can tell me what happened right there? Did structure break? There it was, guys. What's the problem? Sell trade, boom, stop loss. Above these highs, TP, 27.2. Yo, look at this. Look at the accuracy. Look, that was it, guys. Needed to be out, 27.2. That was it. All right. That was it. You got a second entry over here. Look at this. So if you didn't get in here, market said, no worries. I always give people a second chance. Your sell trade was right in here. Break structure. Really, it was, the structure was like right here. So really up in here. Those are your verified entries. Because guys, look, I want to explain something to y'all, and this is very important. And I'm going to come back out of the market to do this. This is very important. And I know that a lot of you have already experienced this before, okay? Regardless, and I don't care what analysis tool you're using, I'm going to keep saying that because it doesn't matter. I'm only using support resistance in this example because it's simple. But guys like fibs, harmonics, Elliott, structure, any trend lines, channels, any, it does not matter, everything. It's the same principle. Like, you can predict that something's going to happen all day long, but at the end of the day, you can't trade your predictions. You have to trade what you see in front of you. You got to trade the stuff that's reliable and consistent and can be applied. Guys, look, I pulled it up on the 5 minute. I pulled it up on the daily. I pulled it up on the 4 hour, the 1 hour. I'll go to the 45-minute chart. It's the same principles. It works everywhere. I'll pull up any pair. You know, and that's what you guys have to rely on. And because here's the thing, guys, if price is rising, you know, and you want to take a sell trade up here, let me get rid of these ads. These ads are coming for me tonight. You want to take a sell trade up here at this level, you have to understand that anything taken in this region right here is high risk. It's high risk. I want who in here can tell me why, the fundamental reason why this trade right here, this trade is so high risk. Yeah, structure hasn't broken, but what does that mean? What does it mean if structure hasn't broken? What's the fundamental principle here? Exactly. Who's the first one to say it? Frank. Exactly, Frank. That's the key. The key is that until this low right here breaks, the market is bullish. So if you take a sell trade, you are officially counter trend trading. Officially. And that's the fundamental reason why it's a riskier setup. Right there. Because what's the market going to do? 75% of the time, it's going to pull back to the recent swing high, and it's going to just keep going. Retest and keep going. You guys saw so many examples just now where it did that from like major levels that you could have been looking at, you know, or it might even pull all the way back to structure and then do the same thing. It's not until this point that we say, okay, we have with fair amount of confidence, we can say that, you know, most of the time at this point, it's now going to continue down. Here's our sell trade. Verified, confirmed, high confluence, high probability. All right. All right, all right, all right. 7 minutes. Okay, thank you guys for those of y'all who are telling me how much time I have left. Okay, let's just keep looking at examples. All right, let's say that, well, here we go. I think I see an example of one where it might, let me see if I can find an example where it doesn't work for you guys, because that's just as important. Let's try this area right here. Let's say we were looking for a sell trade right here. So just so, you know, simple principles just to keep the concept nice and focused. See a bunch of rejections. Let's say we're looking for a sell trade right in here. Let's go to lower time frame, check it out. Okay, perfect. This is important. I want you guys to see that there are going to be instances where it does not work. So here we go. Ready? Here we are. We're looking for a sell trade. And we come up, structure does breach, and we do retest. But then what happens? We end up going bullish. We break back into bullish structure. We retest on the other side, and then it's a buy trade. Okay, so I want y'all to see, you know, and you know, this is the key, guys. You need to know when it works, when it doesn't. Be prepared. You're gonna lose some trades, but all in all, guys, all in all, you guys have seen it's going to help a lot. You're gonna be a lot more profitable. Okay, so in this case, how are you gonna play this? Yeah, I mean, it's still retested. Yeah, absolutely. You know, so how are you gonna play this? You're gonna take your sell trade. Stop loss is going to be above the high. You're going to lose the sell trade. And once you lose the sell trade, you're now going to look at the market with full clarity and say, okay, now we've broken through. Now we're retesting on the other side of this zone, and you don't have to know what support and resistance is. Let me get rid of this now. You don't have to know that, but what you do have to know is that structure, which was previously right here, has broken bullish and retested now. Okay, which means you do what? Means you buy. Boom. And that's all she wrote. And that's it. And that, look. Y'all understand? Do y'all understand? Look at this. Look at the size. Just bear with me here. This is a 525 pip win. This is a 70 pip L. Once you accept that there will be a couple losing trades, it'll help you so much because you're going to have the clarity you need to bounce back and make money. All right, I have 4 minutes left and not a lot of time to do a lot more examples. So what I'd like to do with the last few minutes I have here is answer any questions you guys have about anything that I have said in this session. We've now covered the last main type of entry I wanted to teach you guys about for market structures. Is this your favorite type of trade out of the three? Charles, my favorite type of trade out of the three is the market continuation, because I open up a chart, I'm like, okay, we're bullish, and I just click buy without any thought at all. I mean, you could be the dumbest person in the world and just click that button. I mean, that's my favorite type of trade. You know, this is you know, it's very helpful for people who trade other things, and it's really going to help as we move forward. You know, all this stuff builds, guys. It all builds. If y'all have any questions, you know, feel free to hit me up. Yeah, I hope you guys have a fantastic night.